Hey, good morning, traders. This is Rick with Hit Run Candlesticks. Today is February 11th, 2022, and we're about 25 minutes before the market opens here. Hey, today I'm not going to put any trade ideas out here today. You can go look at the yesterday's video, the day before, the day before, the day before, the day before, and I put some trade ideas, charts with targets on each day. But today, I don't think I'm going to do that. However, I am going to talk about some charts here and a little bit about the market. So I hope you hang with me here. I'll keep this maybe 15 minutes or less. So let's see what we can come up with, okay? First of all, everybody has the freedom to trade, okay? You have the freedom to make choices. You have the freedom to buy this or buy that. You have the freedom to put a stop on. You have a freedom to go take off for a week if you want. You have that freedom as a trader. Excuse me. Apologize. And we have the freedom to decide whether or not we're going to trade here today. We really do. As I look at this market here, I'm thinking to myself, good grief, we are in an area where the sharks feed on you. The sharks feed on you right through here. This is the feeding ground for sharks. And I just have to question, should we be out there buying longs or should we be out there buying shorts? And I want to share a few things with you. So let's take a look at this, okay? First of all, I think we need to have some good direction. And if we have direction breakout, then I think bullishness is in the cards. And then what we'll do is we will worry about all the little minefields up here. If we start pulling back and we get below this area, now what we can do is start looking for bearish signs, and we will worry about the little minefields that's down there. But through this area right here, this is just chop. This is very uncool trading. Another thing that I am really becoming big on, and it's kind of a change that I'm making from the past to 2022, and that's, I don't want this kind of stuff. And when we have this kind of stuff, I want to relax, go fishing, things like that. What I want is something that looks like this. I want the price and the T-line to be above the Trendicator, green dots. Right here, we've got nothing but junk. Any buying here is purely guessing by a trader, purely guessing. There's absolutely no technical reason to be all kinds of bullish or all kinds of short. Day traders do pretty well. Swing traders, you're going to get slaughtered. Long-term traders should do pretty well in the long term. Now, the swing traders just don't go change to day trading because that's a different game in itself. So I want to go look at some charts here now. Oh, first what I want to do is so here's the SPY. Let's take a quick peek at the diamonds. Diamonds the same way. Here's what I'm looking at. Anything above 347, anything below this 357 up here in this red box, this is dangerous trading. Qs the same way. There is just no point in trying to trade here. Yesterday I went all cash for a couple reasons. One, because the market's horrible, but also because I'm going on vacation here and leaving here in just a little bit. But I wanted to get this out and just, point to a few things. Take a look at IWM. There is no reason to trade in this area until we break out for longs or break down for shorts, okay? Let's take a look at this chart right here. There we go. Before we do look at that chart, what I would like to remind everybody is if you go to our blog, I'll put the link down below in the comments here. But if you go look at the Hit and Run Candlesticks blog, there's, a bit about the market. Here's a case study that I did last night on Snap if you want to watch it. Down below that, we've got some closes, tells whether they beat or not and whatnot. So go check our blog out if you would. And like I say, I'll put a link down below, okay? All right, so here's T2122 up here. And we're in a bit of an overbought area, and we're also moving down below the Trendicator here. So now, truthfully, here's what I like. I like to actually, I do better trading when we are in an overbought area versus an oversold area. I do better trading up there. So when we start leaving this area, I start getting a little cautious. Now, coming out of the bottom here, that's pretty nice. You can catch some really good trades. But like I said, I personally trade better when we're up here. This is the T2123 chart. It's the COM 4-week high-low chart. Please feel free to Google these and you can see what they do. Because of a trader in our room, he showed me this. It's got to be 3 years ago now. And I use it pretty faithfully. It's on another monitor over here. And what I use is the hourly and 15-minute, and I'll go back and forth on those. So let's take a look at the hourly here. If this is what I want, this is what I like to see. And I like to see that in the 15-minute. Early turns, either turning up or turning down. So I want to see price in the T-line to start moving over those red dots, turn them green, just like this. I have found that when we put everything in order, when the market, my market, by the way, is generally the SPY followed by the Qs. So when price is above the Trendicator and the T-line's above the Trendicator, that's when I get excited for longs. And this is also one of those confirming indicators. Hourly is when the market's really trending really nice, then the hourly works out pretty good. But for those early turns, I do use a 15-minute. So this is what I'm looking for. So in combination of price being above the Trendicator and the T-line being above the Trendicator for bullish markets, say on the SPY, then I look for this as also being confirming. I like to see the T2122 confirming. Down here is UVXY. And, sometimes I look at UVXY, sometimes I look at VXX, sometimes I look at the VIX itself. Any one of those VIX instruments really gives you a good story. As long as this stays red, then the market has a bullish chance. This starts getting green, then the market has a bit of a problem. Here's the SPY, and right now we can see the SPY. This is live real time this morning, and here's our kind of a red band that we put on our danger zone. And until we break out, I feel that we're extremely dangerous trading here. So if you have a checklist of things you're looking at before you go long or you go short, these things will also give you the temper or the attitude of the market, and they will help you decide. They help me decide anyway. Is this market good for bullishness? Is it good for bearishness? Or maybe is this market in such shape that I don't want to be near it? That could be an option right there, okay? So as I look at this market, I know there's a thirst. There's always a thirst to catch a bottom. It's something that'll never leave a trader. There's always that thirst. But if I found that by curbing that thirst, it's hard sometimes. But if you really pull away from that type of trading, you'll find you'll make more money, because I will bet you $100 bill that if you looked at your past statements, and if you looked at weeks, forget about days, just look at weeks. And at the end of weeks, if you counted up all your winners, you probably did pretty good. You probably did really good. I know I did. But then when I count up my losers, what happens is that starts messing. Actually, I probably should have done it this way. Here we go. Let's start down here. If I count up my losers, then what happens is I didn't make, let me grab a tool here. There we go. There we are. I didn't make all that money. I really didn't. When you put in those losers, I ended up only making that much money. So knocking those losers out of the picture, which truthfully, you're never going to knock them all out. Okay, there's no such thing as a trader not having losers. It's impossible, truly impossible. So wouldn't it have been nice? Man, that would be nice. Week after week after week after week after week. But when we add the losers again, you only keep that much money there. So one way to help do that, now there's several ways out there, but one way to help is to only trade the market when everything is in your favor. And I know some people are probably thinking, well, jeepers, it's never in our favor. No, that's not true. That's not true at all. Let's come back here. I would say the SPY was in your favor right here. And you can go back and look at those other indicators and you'll see what I mean. Look at the Qs. Was the Qs in your favor right here? Absolutely. Was the Qs in your favor short right here? Yes, they absolutely were. So diamonds, you can do the same thing with the diamonds. Was the diamonds in your favor? Yeah. Was the diamonds in your favor short? Yes. You feel free. Please go look at those other indicators, match them up with the timing, and you'll see. You'll see. So line things up in your favor. When you see this happening, stay away. Stay away. All you're going to do is give your money back. You're going to win. You're going to win a trade or two or three, and then you're going to lose a trade or two or three. Another thing I want to take a look at is let's see, TNX. There we go. So this is the 10-year Treasury yield here. Look, just watch what this thing is doing. Keep an eye on it. As we move up here, this is going to put pressure on the market. If we start to see this pull back, and I'm not saying it is, I mean, it certainly doesn't look like it from here, not based on yesterday's candle or the recent chart, but we certainly could get some pullbacks. Yeah, we could certainly do that. And those pullbacks, when we start seeing that happen, that actually could lean in to some good swing trades out there. Reverse rallies right now is what I would call them. Reverse rallies. So keep an eye on that right there. Keep an eye. In fact, it might be a good idea. Maybe I'm going to do this. Maybe I'm going to come over here and just say TNX. That might be a better way. That might be a better way to set up these four charts. There we go. How's that? I like that better. So I've got T2122, T2123. I've got a VIX instrument. You can pick whichever one you like. And then that the 10-year Treasury yield index here that kind of helps out because this is in the news an awful lot these days. So it might be worth watching. Anyway, I had said I was going to keep this to about 15 minutes, and I'm coming up on that. I'm at 14 minutes right now for this video. I want to thank everybody for watching. Have a wonderful Friday. Thanks for watching our videos. Go check out that blog. I'm like sure that I put the link below so you can just click on it. And every day that blog gets posted pre-market with maybe some clues into the market. All righty? You guys take care. Have a wonderful weekend coming up. And just have a great time, okay? We'll see you.